Hello everyone, Kenton Kivestu from the RocketBlocks team here. In this mock interview video, we're sitting down with Ankur Biswas, who is a product manager at Microsoft focused on the Azure Cloud Computing Group. And in this particular mock interview, we're walking through a full product case focused on how to handle and evaluate a competitive threat to Microsoft Word. So let's go ahead and see how Ankur handles this. Awesome. Well, thank you for joining us. The first question that we want to ask you today is, imagine that you are a product manager at Microsoft and you're working within the Office suite, specifically doing a lot of work on the Microsoft Word product. And one of the sort of sales VPs that works closely with your group and is out there selling the products that you're building has increasingly over the last 2 quarters said, Google Docs is making a big push. Competition from them is greater. My clients are talking about it all the time. Like, we got to do something. And she keeps bringing this up. Your manager has said, look, we need to figure out whether this is a real concern or not. So my question to you is, with that context, how would you either validate or invalidate whether this is a credible concern that we really need to be worried about?
Okay, just to be clear, the trade-offs here are solely between the Microsoft Word online version versus Google Docs. Obviously, Word is sold with multiple kinds of subscriptions. We're purely talking about the online health version, right? The cloud-backed one.
Yep, sort of the two, yeah, exactly. Like the cloud collaborative one versus Google Docs, which only is operating in the cloud.
Okay, perfect. Now that I know kind of the space that we're operating in, can I just have a minute to make some quick notes?
Sure.
All right.
Fine by me.
Okay, so I've made a couple of notes about where I want to take the question, but overall, I'll just give you broad themes of what I want to explore, and then maybe we can dive deep into things that we both think are uh, probably better suited to answering the problem.
Okay.
Essentially, I want to track what success looks like for the product itself, in this case, Microsoft Word,
Yep.
and benchmark that, and the Word Online version specifically, and benchmark that against internal metrics and data that we have access to within the Microsoft organization,
Okay.
and kind of use external data sources to validate whether there is any concern to be had or not. So I want to cover kind of some internal metrics first, and then talk to you about what external data I would use to kind of validate those assumptions
Okay.
as kind of a sanity check on that data. Specifically within internal metrics, since we are talking about users kind of moving away from Microsoft Word Online to the online version of Google Docs,
Yep.
there's two things I want to look at.
Okay.
The first thing I'd like to look at is adoption, specifically that Word is likely to be hemorrhaging profits and users to Google Docs if either less people sign on to the platform or more people who are already users kind of go away from it. That's one
Okay.
of two ways in which the adoption problem could manifest. The second is assuming that it's kind of a zero-sum game where these are the only two players in the market, and that's an assumption I'm just going to go with for now, is that in terms of usage, if people are performing the same number of tasks, if they are performing fewer of them, if they're using Microsoft Word Online less, it probably means they're using some competitor to accomplish those same set of tasks. So I'm going to look at some usage metrics
Okay.
in that regard. Before we go in, do you have any questions about kind of the assumptions that I've made so far?
Yeah, so I think that sounds pretty clear. At a high level, you're saying there's some internal metrics I want to look at, and then whatever we can find externally to try and validate as well. That makes sense. And then within internal, if I understand you correctly, you're saying, hey, I want to look at sort of sign-ons and adoptions into the adoption of the product. And then the second part of that was, so sign-on was one thing, and then the second part was some series of tasks and some
Yes.
level of how much people are doing this. Okay, that
Correct.
sounds good to me.
All right, awesome. So I will cover adoption first because I think that is going to fundamentally kind of be the difference in users, because that's what we're talking about. The number of subscriptions, maybe if it's a sales VP that's concerned about, it's the number of subscriptions that we sell that really hit
Yep.
our bottom line. So I want to explore that first, just
Okay.
purely between the two. The first thing I'd want to look at and consider, again, an assumption I'm making here is I have access to this data within Microsoft and I can get to the person that has it if I need to. First thing I'd want to look at is daily or monthly active users over a period of time.
Okay.
Monthly active users is the number of unique users that are on the application month over month per se. So if this is something that the sales VP is coming to us to, I'm assuming we have access to that data. And essentially, if we see a trend where, let's say, from July through December, uh, so in the July of 2020, the number of monthly active users is lower than that in July 2019. That's a problem. Also, if we know that there are seasonal trends associated with data that maybe during the middle of the years when companies have the most amount of finances and they sign on to new subscriptions,
Mm.
and the fall semesters when a lot of sales happen and a lot of work happens before the holidays, if we see that the months of July, August, and September overall have the number of monthly active users declining, that may be something that we want to investigate. So monthly active users month over month in the same year, as well as the same months year over year, are two metrics that I'd like to look at specifically in terms of just adoption itself.
Okay.
Uh,
That makes sense.
the second thing that I'd want to look at is either churn or retention rate. So I'd say that those are usually the inverse of the other. So if we're just talking about retention rate, it would be the percentage of customers who've stayed on that platform over a certain period of time.
Okay.
This would predominantly be towards not enterprise subscriptions that have a 10-year, 15-year, 20-year commitment, but individual licenses that are renewed monthly or renewed yearly, or
Mm.
maybe are used on trial and then switch over to some sort of paid model.
Got
So if you can see that the number of customers who are using this is reducing over time, the retention rate is reducing over time. Again, if it's compared to the previous year, the same month, or month over month, if it's continuously reducing, that means that we're probably hemorrhaging adoption to some other platform.
Got it.
Uh, the last thing is on the enterprise segment, because I know the sales folks would be concerned with enterprise sales because that's where the bulk of our profits would come from.
Yeah.
I know that generally Office is sold in 10-year licenses, and more software like SQL Server, etc., also sold in 10-year licenses. I'd want to know the number of customers that we have whose licenses maybe ended 3 years ago, 2 years ago, and this year, and the number of them that have re-signed on to those licenses. Sometimes they
Mhm.
automatically renew, which is great, but a lot of time enterprises will negotiate with Microsoft to get better deals, to maybe get new things like a team subscription, for example, thrown in there.
Yep.
So I'd want to see how many folks have signed on and what kind of incentives we've had to give them in case they've been unwilling to sign on.
Got
So
it.
those are kind of overall, then on an individual basis and then on an enterprise basis, how I would want to look at adoption. Before I want to go into usage, again, do you have any questions? Is any of that not clear?
Yep. No. That is clear. That makes sense. So why don't you tell me a little bit about the engagement stuff, and then we'll come back and we'll wave our magic wand and get you some of that data.
All right, awesome. So the other internal metric of usage is going off of the assumption that, let's say, as a user, I need to kind of as an accountant, I want to write up the valuation of my company. I don't know why I would want to do that, but maybe I do, and that's something I use Word Online to accomplish. Now, over the years, I think a fairly a strong assumption can be made that the amount of time taken to accomplish that task or is fairly standard across year on year, hasn't changed too much over the past couple of years. The mathematical processes remains fairly similar. Therefore, if the amount of time taken by users to accomplish in these persona groups that are of interest on
Mm.
our application, if the amount of time spent is less, it probably means they're doing the same things on another application that we don't have access to
Okay.
telemetry to. So the couple of things that I'd want to look at is one, session duration,
Okay.
which is predominantly for every time a user logs on, how much time do they spend on the application? And this can, again, maybe we can segment this by enterprise and regular kind of customer, but essentially every time you open the application, how much time are you using
Yep.
it for? The other thing I'd like to basically see is daily traffic, just very uniquely every hour of the day or the peak hours of the day. How has traffic changed over time in terms of a pattern? So year over year, month over month would be a good way to see it. How many people are concurrently using the application online at the same time.
Okay.
If those trends are going downwards, it probably means that we are hemorrhaging users and money somewhere, which is where I would try to benchmark against some external data, which is where I want to move on to. But again, before that, if you have any questions, feel free to let
Okay.
me know.
Cool. So sounds good. Understand the framework. Let me give you some data that we have.
Cool.
So, and I'm going to start with the first sort of metrics that you had around adoption.
Mhm.
So I think one of the first things you called out was year-over-year numbers of I think you said DAU and MAU. I don't have the DAU numbers handy, but I do have MAU numbers. And if you look at August year over the month of August year over year, the month of September year over year, the month of October year over year, basically depending on the month, we're up about 1.5 to 2.2%
Mhm.
year over year for those months. Retention cohorts, I don't have the specific numbers on there, but essentially, like if you took an actual like cohort and looked at 100 people sign up this month, how many are still there, and you have that for different cohorts over the years, those are looking pretty stable. So there isn't much movement there. And then the last thing you mentioned, similar story here on the 10-year licenses. Like if you go and pull the numbers for folks that their licenses are expiring, either the next 3 years, the next 2 years, next 1 years, and you look at renewal rates for those different folks at this period in time and compare them to the same renewal rates that we had the comparable amount of time, the last time say the comparable number of years left on the contract and what percent of people had already renewed, those look basically static. We don't see any sort of material movement there as well.
Okay.
So that's what we see for those three metrics you called out. Then on the engagement stuff you mentioned, session duration, what we're seeing there is there is again, you can look at this on a month over month basis, like average session duration in August, September, etc. And we see declines there between about 8 to 12% depending on the month. And I don't have specific details on daily traffic concurrent numbers right
Perfect. All right. So I'm gonna go over one of the assumptions I made before and then focus on the session duration time because
now.
that seems to be where we're bleeding the most. Um, One thing I would like to know is does our sales team consider the 2-year 2% increase for monthly active users? Is that what they were expecting, or is that less than what they had benchmarked against? That might be some good information to have. Is
Yeah.
that something you're aware of?
Yeah, so that's a really good question. So 2%, obviously, it's positive. So in general, that's some good news. But the team was hoping to hit 5 or 6%. So it is not quite at goal.
Okay. So that's another thing to hit off against as well. Is that adoption is increasing, but perhaps not at the rate at which we wanted it. So there might be some truth to what the VP of sales has heard from their sales team, knowing that there's a lot of customer interest in competitive products. So we're not getting the same numbers that we might need, even though we are increasing users year on year. One kind of just assumption on my part for that could be that it's not maybe a zero sum game in a stable market, but maybe the market for the use of these of online writing platforms has increased year on year. Maybe because folks have better internet connectivity, more tasks are being performed online, etc. So given that the size of the market is increasing, maybe we're losing market share to other competitors, even though on aggregate the number of users that we have is increasing. That's definitely the story I would like to see with those adoption metrics, even though they are going up year on year, how we stand with respect to the rest of the marketplace. That's kind of one line of investigation that
Okay.
I'd like to pursue. The second thing is the session duration
Yeah.
itself going 8 to 10% lower. Now, one thing is that it could be that's actually a good thing. That's something I should validate
Mhm.
with kind of the data science teams. And I can tell you a scenario where that's true. A lot of the times, the main aim of these applications is to increase people's productivity. That often means that the less time they spend doing certain repetitive tasks, the better it is for them, because they can spend more time brainstorming, more time with their teams, more time doing other things that are also productive for the business.
Mm.
So if we have made sure that we've added new features into the system to increase productivity, let's say new features that help us save faster, like an auto save function, for example,
Yeah.
that means that the number of clicks taken every time you go and hit the save button, aggregated over a year for all the, let's say, millions of users we have, would mean that the average session length has gone down. So I would want to investigate that. One, this isn't a bad thing. So I'd want to go to the feature teams and ask if they have published any features in that period of time
Hmm.
aimed at reducing the average session length. And if that is the case, we would know for sure that that's maybe not a bad thing,
Okay.
specifically given the original problem statement that we're bleeding users and money to competition.
Yeah.
So that may be a good thing. If that's not the case, and this is something that completely takes them off guard, we can go to the second theory, that it is perhaps that they're using Word Online less and less for those same tasks, and they're moving over to a
Yeah.
thing like Google Docs to accomplish those tasks.
Okay.
Is there any one of these lines of investigation you'd kind of want to pursue first?
Yeah. So what I can tell you on the session duration thing, and I do think your point was interesting. Like if we had launched particular features that really are time saving features, they're going to make people much more efficient. That could be a celebrated thing, and we
Mhm.
would welcome those numbers going down. What I can tell you is that when you ask around internally the specific feature teams, there hasn't been a lot of features that we expected to knock down session duration because of productivity increases. And the magnitude of this particular change, like down 8 to 10%, is pretty strong relative to movements we've seen in session duration over the last 5 years where we've been tracking it. We've never really seen it decline sort of at that magnitude.
So I think the one thing that immediately stands out to me there, just given what I know of our users and how they use the application, one thing that could cause session duration to go down significantly is frustration in the application itself. That is, you
Hmm.
you open up something, you try to do something, it doesn't work really well, and then you close it and immediately move on to something else and accomplish the same task somewhere else. That could be kind of the behavior that we're seeing here, where the users are switching over to something else, even though they have an access or a license
Hmm.
to use Word Online.
Yeah.
So this may not necessarily mean that we're bleeding revenue in the short term, because a lot of these enterprise users don't pay for the subscription themselves. The companies do it on their behalf. But in the long term, if a lot of this kind of user frustration and dissatisfaction builds up, it means that we're probably going to lose that enterprise license when it ends, or at some point in the future, or we're going to have to spend more money trying to get that customer back. So that's kind of the way in which I'm accomplishing. I'm looking at this problem
Yeah.
from the perspective of individual users. It's very much the same thing, but I guess the behavior may be a little bit harder to track down and clump into a pattern.
Yeah.
So if that is the case, and we go with the assumption, first of all, what do you think of the assumption that is the behavior that we're seeing, or you thinking, like, do you want me to come up with some alternatives there?
No, I think that's I think your high level idea there that based off what you're seeing in the metrics, maybe this isn't a short term problem. Like revenue is still up, it's growing, but usage is down, and it's not down in sort of in a positive way. That this might be
Mhm,
sort of a long term problem for us. And
mhm,
I think your sort of assumption about where that would impact things in the future is in renegotiation of deals and making sure you get the renewals. That might be something that 5 years down the line, if that trend continues, those deals are a lot harder to win, or
yeah,
they're a lot harder to win as profitably as we've won them in the past. That type of thing.
yeah.
So I do think that makes sense. I would be curious. We haven't really talked about the sort of external things that
Mhm.
you were interested in, so I'd be just curious to hear what you were thinking there.
Yeah, I know that external data is sometimes kind of harder to quantify and know the truth behind, because
Yeah.
we can infer a lot just running algorithms on our own data. So I want to kind of keep it simple and use the external data that we have to validate some of the assumptions we've been making
Okay.
so far. So I'll look at two things. The first one is just what the competition is doing based on publicly available data. The
Yep.
second one is any externalities that might be influencing users and their session time. Externalities, really quickly, are things like online reviews, notable YouTubers making reviews
Mm,
about the product. On an enterprise basis, companies that are known as the gold standard for rating enterprise products. There are some that review cloud services. There are some that review performance. Any reviews like that for the word online product that have been negative and damaging could mean that the average amount, and when those experiences are validated by day-to-day users, it might mean that as a path of convenience, because it's the easiest, most free available option, they start off with using word online, but then they slowly move on to anything else. these
yep.
these kinds of reviews and external influences can be fairly easily tracked down because we have search engines available to us to get the data. Something I think that's more interesting is benchmarking against what maybe the competition is doing from publicly available
Yep.
data. So there's kind of three indicators of our competitors we can look at. The first one, which is the stock price of those competitors, who's especially those who are most tied to the service that is competing with us.
Yep.
The second one is their publicly published reports of projected growth compared to growth in the industry itself.
Okay.
So for and Google may not be the best company to compare against when we're talking about the stock price,
Yep.
because the Google stock price is, Google's search engine probably accounts for most of the fluctuations in stock price. But a company might like Dropbox, maybe a better competitor
Yep.
to look at against there. So if you see that company stock price, and the stock price is indicative of how much the market has faith in that company and users and
Yep.
money and so forth. If it's constantly increasing in time and their primary service is competing against word online, it probably means that the number of users they've gotten is increased a lot over time, given the percentage growth that they have. That the users are more likely to use it and they're very satisfied with that product. Only then
Yep.
have they put their own money on the line in Dropbox's business.
Yep.
The other thing to validate against this data is projections, and we talked about this a little bit, on how much the overall market is likely to increase and how
Mm,
much of that pie that Microsoft has or Word Online has reduced or increased over time. If we've kind of maintained the same level of market share, it or that market share has increased, it's probably still a good sign, and the lack of the reduced session duration is not something we have to worry about in the short term.
yep.
But projections of what that's likely to move to in the long term, when licenses expire or when new trends come in, is something we want to see.
Yep.
The last one is in the short term itself, because the market trends are something that can help us get long term information. In the short term, I'd love to see what the competition is doing to acquire new users.
Mm,
Are there sales events and sales pitches planned to enterprise customers, bundling in the Dropbox service or the Google Doc service with other enterprise services that they provide to
yep.
customers?
Yep.
Are they giving heavy discounts to students to use the product? Are they collaborating with universities and giving out free
Yep.
subscriptions for years to those universities to use, just so that they take short-term losses but acquire users in the short term, which could cause us harm either now or later.
Yep.
So I would like to validate the data that we've uncovered so far around session duration and the adoption being not as good as we'd like against these external factors. And if we see that there is a mismatch there, we see that our market share is reducing, the competition is aggressively trying to get new users on board, or we have bad reviews which may lead to swaying people's minds on whether to use our product or not. I
Yep.
think I would agree with the VP of sales in saying that we do have a problem which we need to address.
Okay. Cool. I don't have data on all that, but I do have a few pieces of information here for you.
Sure.
Um, on the Google stock price, I agree with sort of your assumption there. Like, there's so much wrapped into it. Google has only recently broken out Google Cloud into any sort of separate bucket, and that has so many things wrapped up into it because it has Google's whole cloud infrastructure plus G Suite, et cetera. So
Mhm.
it's really hard to tell there. So I think sort of a wash from our perspective right here. Market share numbers, I unfortunately don't have. The other key piece of information I do have, though, is we do know, and there has been a bunch of noise that Google's been making in the market about really doing a push around user functionality around templates for their docs. Easy to use templates that a user can start with and basically build their doc from the get go. And they've been doing a lot of PR and marketing with bloggers and YouTubers around this type of functionality, specifically as far as we can tell, with an aim of actually capturing the attention of younger users, either at universities or maybe who are in their first jobs, from 1 to 2 years out of school, that type of thing.
Okay. And I think that that could relate directly with um, the average session time that we have on our users. So because Microsoft has been fairly ubiquitous over the last decade or so, I think Word Online or the desktop version itself would be the first place a user like that wants to go to because they're the most familiar with it. But if they feel that the user experience in performing that task is hampered, then I think is where Google could kind of sweep in with these templates and kind of get those users from us, which kind of validates both the assumption on the adoption not being as high as we'd like year on year. And we have some users coming in, but not as many as we'd like. But especially the second consideration that you had about session time reducing. So folks logging into Word Online as their first go-to tool, but not actually finishing their tasks or saving their tasks on the tool itself. That may not actually be just limited to university students. It would also be to enterprise users
Yep.
that do a lot of documentation. So accountants, PMs, lawyers, for example, for whom templates for repeated documents, invoices, things like that could
Yep.
be fairly useful. Those, I think, should be the markets that we investigate then and narrow down the same things that we're looking at in terms of monthly active users, session times, etc., to those critical user personas and see what the data is
Yep.
telling us there as kind of a second level of investigation.
Okay. Yeah, that makes perfect sense. I don't think we have time to do that particular step today,
Okay.
but just based off everything we've learned so far, how would you sum up, like, if your manager came to you and asked, what have we learned? Like, do we think the VP is on to something, or is this just, she's sort of fuming about something that's not real? How would you summarize what we've learned?
I would say to my manager that for the short term, we don't have too much to worry about because the way in which the problem has manifested itself is not likely to affect our enterprise subscriptions, which is the bulk of our money and users in the short term. As well as because of Microsoft's ubiquitous brand value, unlikely to prevent users from ever using the product in the short term itself. So over maybe the next 3 to 6 months, we don't have too much to worry about.
Okay.
However, the fact that average session times are reducing and the competitors are making a break for certain segments of our user base could pose a problem for us in the long term, either in preventing us from renewing subscriptions from other enterprise customers in the long term, but also getting the next generation of students or school students or college students interested in Microsoft products in the long term. So I would say that yes, there is a bit of a concern that should be addressed over the next couple of years. I personally would not recommend taking any drastic steps in the short term over the next 6 months or so. I would recommend more of an investment into research and identifying the specific user groups.
Hmm.
So let's say, for example, in this case, it could be accountants, could be lawyers, could be students, could be first-time internet users, for example, which are most at risk by the competitors' plays. I would invest research into that over the next 6 months and then engage the product teams on Word Online to help us deliver features that are going to make sure that the competitors lose their edge on us. So we provide those experiences, whether it's through templates, whether it's through something else, whether it's through the rest of the productivity suite that we have. We provide them with features that prevent us from hemorrhaging users in the long term, because that's where the concern seems to be from what we've discussed so far. So that would be my overall recommendation.
Got it. Okay. Makes a lot of sense. Thank you.